Nice to have you here on Bloomberg.
Thank you, Carol. It's a real pleasure. And if I may say, I've been a big fan of yours for years.
Well, thank you.
I listen to your program. It's always on in the background when I'm on a call. I just think you're the best interviewer at Bloomberg. So this is a real treat for me.
Well, you're very kind. Doesn't mean I'm going to be easy on you. I'm just going to tell you.
No, that's fine.
No, I'm kidding. Thank you. You really started off my week really nicely. Take us back to the SEC. You were there, if I got it right, I think a couple of weeks ago. Tell me about that exchange and what they were trying to figure out, because I am curious about what they are thinking in terms of regulations when it comes to cryptocurrencies.
Great, yeah. Just in regards to the SEC, we're in discussions with our regulators all the time.
Right.
But this is really, we've been spending time over the last several weeks with the innovation groups at the regulators and coming up with ideas, sharing ideas, getting their feedback, et cetera. This whole blockchain area, what we focus on is digital securities, and I can talk a bit about that later, is completely new. I'd like to say that, actually, I don't like it, but it's reality. We're a bicycle with training wheels with Ferrari brakes, which are the regulators.
It's a great way of explaining it, actually.
That's where we are today. Eventually, the bicycle will become a Ferrari, but that's several years away. And so we have a lot of ideas, and the regulators know this tsunami is coming. They're very focused on cryptos right now and DeFi, or decentralized finance. We're taking it a step further and focused on digital securities, and we view ourselves as the bridge between traditional finance and DeFi. That's a direction. That's our mission statement. That's where we're heading. But they know this is coming. We call it a tsunami of opportunities, and it's a tidal wave regarding what's happening in the crypto space. And they're trying to stay ahead of it. A lot of smart people there trying their best. They're the guardians of our financial system at the SEC and FINRA, and they want to make sure that they get it right.
So talk to me a little bit more about digital securities, exactly what they are, what it presents in terms of opportunities for investors. Unpack it a little bit more for me, if you would, Pat.
Sure. Digital securities are very similar to traditional securities. So what we were approved for were equities, broadly defined, and fixed income for corporates, both public, non-national market securities, as well as privates. And by privates, I mean all exempt securities. So Reg D, Reg S, 144s, et cetera. And they represent a proof of ownership of some type on the balance sheet and are an underlying asset of a company. But unlike traditional securities, they can be programmed through smart contracts to comply with regulatory requirements and standards as well. And they can be purchased and traded just like any other security, but it involves the blockchain. So it's very bespoke. It can be very tailored, but all the back office. So I'll give you an example with GameStop and the halting of trading a couple of weeks ago. So one of the issues that have come up is it's trade plus 2 days, right? And it, in the 1960s, it was transaction day plus 5 days,
right?
And then in 1973, and then let's jump all the way to 1994. It became trade plus 3 days.
Right.
Then it took another 24 years for it to get to trade plus 2 days. And while the UI has improved, like on any trading app you might have, E-Trade, Charles Schwab, Robinhood, the back end has been improved over the years, but it's still based on the infrastructure from the 1970s. Now, what blockchain does with digital securities, it really, it's not a revolution, but an evolution of the trading system. So it's just taking it to the technology level.
Well,
plus 0 days.
Right, exactly. I mean, if you think about it, it's a level of, as I've read about it, just the amount of liquidity essentially that could be the result of this. I want to get right back to Pat LaVecchia, CEO at Oasis Pro Markets. As I mentioned, a FINRA and SEC-approved digital asset broker dealer, still with us on the phone in Darien, Connecticut. So I feel like, Pat, in our talking to you and also just some of the research I did coming into this, I know enough to be dangerous. So in terms of digital securities, I mean, you basically, you own an underlying asset, right? What are the advantages? Is it the liquidity aspects? Is it the security aspects? Is it that you can have fractional ownership of something that you might not have been able to own otherwise?
Yeah, absolutely. All the above. There's also the advantages. We were approved for digital cash payments for digital securities. So
right.
If you own stable coins, for instance, or eventually CBDCs, and I heard the comment earlier you had mentioned about Yellen. Mm-hmm. She actually, while she is not a fan of Bitcoin, she actually came out today and also said that the central bank should be looking at sovereign debt currencies issued on the blockchain. So she's not a big fan of Bitcoin, but right. She, in a sense, was endorsing CBDCs to a certain extent. So all those advantages you just mentioned. So if you have stable coins right now, and by that's like DAI or USDC or Paxos, you can utilize that to purchase digital securities. And another benefit of the digital securities is, and this is unlike crypto, you've heard stories that someone had $50 in Bitcoin. It's now worth $100 million, and they can't find their wallet. Right? So it's permanently lost. With digital securities, while the blockchain is immutable, the regulators have determined that the authoritative ledger is either the issuer or the transfer agent.
Right.
So if you own digital securities and you lost your wallet somehow, or whatever custodian was holding it, it got stolen or there was fraud. The beauty of digital securities is it could actually be burned, that digital security that was stolen, and reissued to you. So some of the disadvantages of, let's say, cryptos and DeFi are not applicable to the regulated digital security space.
So, Pat, where do you see it all going? I mean, you're someone who has spent a lot of time on Wall Street in different capacities, and you see, I mean, an aside, I feel like the conversation over Bitcoin, blockchain, digital currencies has definitely evolved from a couple of years ago. So where do you see this all going? Does digital securities take over from, I mean, I feel like we're doing it already, right, on some level. Like, where does this all go in terms of how we trade today, how we invest today?
You're absolutely right. It's not if, but when.
Yeah.
And that could be 3 years away. That could be 5. It could be a decade, but it's coming. And, the light was shined on me by one of my partners who convinced me to get involved in this about 3 years ago. But it's coming, and we're already there. So it's really the back end that's getting changed, not the UI, the front end.
Right.
If you think about it, and we will get there. I mean, 3 years ago, DeFi, decentralized finance, where a lot of the Ethereum projects trade, were less than $1 billion. In fact, it was like $400 million. And if you want to determine value, let's call it market cap. Today, less than 3 years later, it's over $40 billion.
Wow.
Bitcoin just surpassed $1 trillion. I think it's at $900 billion right now, or something along those lines.
Right.
But I mean, who would have guessed? I opened. I tell people this story. I really got involved about 3 years ago, but I actually opened a Coinbase account in 2014. And the only reason I know is because in 2019, I tried to open a Coinbase account, and they told me I already had one. So
it's one of those things, right?
Yeah, exactly.
Well, now that because where do you, when it comes to Bitcoin, I think we're watching these levels, trying to understand it. As I said, I know enough just to be dangerous. When I look at Bitcoin, it's a supply and demand issue on some level. And I do wonder how much of that is at play. I mean, how do you see it? Is it commodity? Is it currency? Is it collectible? What is it?
Great question. And my answer would have been different 3 years ago. But let me just say this. this is a disclaimer. What I say today are my personal views and does not constitute a recommendation or endorsement of any particular security or strategy. Now that's out of the way.
Fair enough.
In regards to
got it.
In regards to Bitcoin, I do view it as a commodity.
Yeah.
It's an inflation hedge of sorts. But 3 years ago, it was more of a, just a play, like gambling in a way. I mean, not for the believers. It was this democratization, et cetera, away from central banks. I think what's driving a lot of the interest to date is beyond Elon Musk and others making positive comments. You look at the big dogs, what I call the big dogs. You look at BNY Mellon now custodying. You look at BlackRock that's announced that 2 of their futures funds are buying Bitcoin. You look at the OCC, federally nationally chartered banks now can custody stablecoins. That's all happened in the last 3 months.
Which is unbelievable, if you get your head around that, right?
Yeah, absolutely. Morgan Stanley's come out as well, and MasterCard has come out backing. So to your earlier question, it's not if but when.
All right, just amazing. One last question real quickly. What kind of activity are you seeing on your platform in terms of growth?
Well, we launch in Q2. So we're launching in, let's call it May or June of this year.
Okay.
I wish we had launched by now, but our tech guys keep telling me that's unrealistic. But we're going to be launching then. Our UI is going to be very similar, we hope, to what like a Robinhood and others have at this point in time. We're seeing a tremendous amount of interest from issuers, both fixed income and equities. They view our ATS as an opportunity to actually access new investors who are who hold cryptos or stable coins.
Okay.
They're very excited about that, and institutions as well, because on the fixed income side or dividend paying side, we estimate the cost savings on the back end are anywhere between 20 basis points to 50 basis points per issuance, which is tremendous.
I was going to say, that's real money. Hey, listen, once you guys launch and everything, come back and update us. I'd love to hear more. Got to run. Pat, have a great evening, and so great to have you on. Pat LaVecchia, Chief Executive Officer at Oasis Pro Markets, joining us on the phone from Darien, Connecticut. Really interesting in terms of digital securities and the platform that they are building. Coming up next, we've got Sound On with Kevin Cirilli. This on a day when we see COVID deaths surpassing 500,000. Kevin, what are you focusing on?
We've got an exclusive interview with the Senate Intelligence Committee Chairman Mark Warner about SolarWinds and cyber hacking. It's going to be coming up in the next half hour. It's a really nerdy interview, but it goes really into specific detail ahead of the hearing tomorrow.
I love nerdy, and that's such an important story, and I feel like we have to spend more time on it. That's coming up next.